Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you the stocks on your screen that will be featured in this recording. And as a quick reminder, if there's a particular stock you're interested in, you can go directly to it using the chapters feature in this recording. Happy Black Friday to everyone. Hope everybody enjoyed a great Thanksgiving. Let's take a quick look at the markets and see what's going on. When we look at the chart of the SPY, you can see that this last zigzag pattern is still in place. Question came up of, well, we relabeled to a wave 3. Does that mean that we're continuing to go to the upside? Well, just as a quick reminder, the original zigzag, and I've taken it off because there was so many zigzags on here. The market's just been zigging and zagging to the upside, following these Elliott Wave corrective patterns, specifically the zigzag pattern to a T, as some of you've noted, and I appreciated that. Reminder that the original one was 610 before. And so even though we relabeled to a wave 3, we're in the upper end still of this rising pennant pattern, which still could be an ending diagonal. And yes, an ending diagonal normally is with a wave 5. But with this 3, we could have a wave 4 correction and move up to the wave 5. If we stay along the projected dotted line there, we could still stay within this diagonal as it continues to consolidate. And that could be the wave 5. And then we'll find out at that point in time if we're going to have an ending diagonal or not. So really nothing has changed other than the main Elliott Wave pattern relabeled, but the target prices are still the same, and the potential for an ending diagonal is still there. But it is likely that we're going to go up and hit that 610 level. So just wanted to share that. Note that we are above the 10-day moving average, but we are in the upper end of this range. So at some point, you would expect to see a little bit of a corrective move into a wave 4 in the not too distant future before perhaps one more run to the upside towards that 610 level. I wanted to show you the VIX. As you can imagine, this time of the year, especially with the holiday shortened week, we do have less volatility. Perhaps the old expression, never short a dull market, is because of lower volume. The market tends to drift higher during those times, but we have seen in the past during these holiday shortened times that with the lower volume, we can have increased volatility. It's not out of the question. So less volume can create more volatility. It's just normally it's less. And so we've broken below that 15 level, and it seems like the VIX wants to come down and test that 12.5 level. And that would be coinciding with a potential move back up to that 610 level on the S&P. Remember in the thumbnail in last week's recording, we were talking about that 610 level. All right, let's go ahead and take a look at the bond market. We look at TLT. We did have some economic news this week to talk about. First of all, everything came out on Wednesday because of the holiday shortened week. We had the jobless claims number that came out and basically showed that fewer initial jobless claims than expected, but the continuing claims is staying strong. So take that to mean that they're not laying off. Companies aren't laying off a whole bunch of people, but they're not hiring either. So we're kind of at status quo in the jobs market. We also had the GDP data that came out, and it was a little bit less than expected, coming in at 2.8, but still okay. You can get 3% growth. That was the Fed's mandate a long time ago. They wanted the market to grow at 3% and try to keep inflation under 3%. So those were their goals. And speaking of inflation, we also had the Fed's favorite indicator, the PCE report came out, and it's sticky. The initial number, the monthly number came in as expected, but that year-over-year number is staying high at 2.8%, and that's the Fed or the media's favorite term right now, is that inflation is still, quote, sticky. So keeping that year-over-year number at 2.8, remember the Fed's target is 2%, so that's bringing the December rate cut into doubt. At one time, it was 100% certainty they were going to cut 25 basis points in December. Now it's a coin toss, 50-50 on whether or not they're going to cut rates at the December meeting. So we'll see. I think there's a good chance they may just pause and see what happens from here, especially with the economy staying fairly strong and the jobs market staying steady. So let's go look at that chart of TLT and see what bonds are doing. As you can see today, we do have an uptick in prices. So we've had a little bit of a run higher in prices. Once again, just this zigzag pattern spot on with a B wave right at the 38.2% corrective level. You expect to move down to 61.8. That's exactly where we went. We tested the previous fib level, came down to the further extended level. Classic Elliott Wave zigzag action, and we held right there at the 100% extension. So from there, we've bounced back up. I wanted to see what happened when we got to the 50-day moving average, which we did on Wednesday. But today, we're trading just a little bit higher, meaning that prices are going up, so yields are coming down a bit. So it seems like the bond market may be leaning the other way. They may be thinking that we could have that December rate cut, and then we'll see what happens if we continue back to the upside or if we continue lower. If this wave 4 holds, which it wouldn't because that wave 4 is at 89%, so that's a disqualified Elliott Wave pattern. You take that off, and the expectation then, based on zigzag Elliott Wave rules, is that you retrace the C wave. When a zigzag ends, you retrace the C wave. So we would expect prices to continue to come up, at least to where this B is, meaning that yields and rates may continue lower. Hard to imagine that if the Fed doesn't cut in December. So maybe the bond market's thinking we are going to get that cut. We'll see what happens. Let's look at the dollar real quick. And remember, I've been talking about how I was a little concerned about this big run we've had in the dollar, but we're starting to get a little bit of a pullback here, and I think that's healthy, especially for international companies. Most companies have international exposure. You've heard me talk about this before. When the dollar is really strong, they have problems with the exchange rates, and that goes to margins. And so that hurts earnings a little bit, not significantly, but a little bit. So you want to see a strong dollar, especially with the amount of debt we have, but we don't want it to go taking off and running too far to the upside, or that's going to be really problematic for companies when it comes to earnings. So pretty interesting stuff there. Let's go ahead and take a look at what the rest of the U.S. markets are doing. We'll take a look at the Dow, the DIA, which has gotten a renewed bid here. So we had this big run up in the Dow, and then we backed off. We didn't quite come down and fill this gap, but we came down to a 50% corrective level on the B wave, which gives you a C wave extension of 100%. So it does look like the Dow wants to go with the S&P a little bit higher here into the end of the year. You know, this is a seasonally bullish time typically, and it's because of that never short a dull market. As I've mentioned in the past, investment managers have a benchmark to hit. They have to beat the S&P to get their bonuses, which is where their big money lies. And at this time of the year, if an institution has already beaten the S&P, they tend to just take the rest of the year off. They don't want to risk going backwards and losing that. So they just stop and they're done for the year. And then you have the other side of the coin, which is those that haven't hit their benchmark are chasing performance. You may have heard that term before. So they're trying to beat the S&P so they can get their bonuses. Another reason why we normally have a little bit of a drift higher this time of year. Taking a look at the Qs, you would expect a little bit of a bid here with rates starting to come down. And it has been there, but not as much as I would expect. We're having a real hard time at this C wave extension, the 100% extension. Now, if we can break above that, then we can start talking about the possibility of going up in the Qs up to that 550 level. I know a lot of you have been asking about semiconductor stocks. We'll talk about that in a few minutes. But the Qs have to break above this C wave extension here at 100%. So if we can get there, then perhaps looking at maybe 550. We'll see. I still have a little more doubt in the performance of the Qs than in the rest of the indices. But if the interest rates continue to go lower, that could put a bid there and you could see some renewed interest. Same thing with the IWM. Very interest rate sensitive, the small caps. And we had a right at the 61.8% B wave correction, my favorite correction in a zigzag of the B wave. High probability that those go to 100% extension. So I think we could see the IWM go up to 250, and then we'll see what happens then. That should be a major point of resistance if we can get that high. We're staying above the 10-day moving average here pretty well in the IWM. We're right here at that A wave impulse extension, and that's providing a little bit of resistance as you would expect. Allow that 10-day moving average to catch up, and then perhaps we continue higher there. So markets do look like we're going to have that normal seasonal drift to the upside into the end of the year. And then January could bring some increased volatility, and we'll see how that plays out. Look at cryptos. That's where all the action has been. I'm sure you're aware of that. Bitcoin moving back up just under 98,000 at the time of this recording. And so we could see that 100,000 level. We got awfully close to it. It didn't quite hit it. So we haven't actually touched 100,000, even though we've gotten awful close. So Bitcoin outperforming most forecasts A lot of people had it between 80 and 100 by the end of the year. Seems like that could actually happen today, if not perhaps over the weekend. Continuing on with the crypto world with Ethereum, it's playing catch up here. Nice move to the upside. Came right up to that 61.8% level. Maybe we'll have a little bit of resistance there because the B wave was right at the 38.2% fib corrective level. That yields a 61.8% extension. So we'll see if Ethereum can break above that and have a further extended level on its C wave up to 100%. But as a reminder, 61.8 is the target. So once you hit the target, then you look to see what your indicators look like as far as a continued move. And my favorite indicator to look at is the DMI. And that black line there is the ADX. And you can see it's just powering higher. So this move in Ethereum is pretty strong. And I would expect to see that continue up to that 100% extension. So we should get up to 4,000 or maybe break 4,000 on Ethereum. And then Solana, which a lot of you have been looking at lately, pulled back a little bit after really having a to the upside there. You can see if we turn the Elliott Wave back on, we have a move up towards that wave 3 level at 250. It backed off, not far enough to create a wave 4 correction. So we're still in a wave 3 to the upside in Solana. So pretty much everything crypto is looking pretty strong. Now let's take a look at the metals. We take a look at gold. Little bit of a move back to the upside here, and waiting on a bid. Gold has been a little concerned with this importing inflation from the tariffs, and then there's this question out there: is President-elect Trump really going to enact the size of the tariffs that he's talking about? Are those more threats? Will the tariffs be less than what he's talked about? And we're just not sure here. On this zigzag pattern. It is a qualified zigzag to the downside, but until we break below this A wave, it's not confirmed. Remember, in the world of Elliott Wave, there's a difference between qualified and confirmed. So we could continue back to the upside here further in gold, but I think gold is going to be just kind of range bound here a bit until we get into January and see what the result of those tariffs are going to be. If President Trump enacts those tariffs, I think we go down in gold. If they're not as strong, then I think maybe gold finds a bid. Same kind of thing here with SLV. So we look at that, and you can see over here, looking at SLV, also kind of struggling down here around this wave 4 correction, which is at that 61.8% level that I like. So maybe we can get a bid here in SLV. It is lagging behind gold a little bit, even though, once again, I think the metals are going to struggle just a bit until we find out what's going to happen from the tariff side of things. All right, now let's go take a look. You all ask about UNG, and so we'll look at UNG. And this is something that I wanted to mention and remind everybody that we are giving away one of our free level 3 subscriptions. We're giving away for free. It's not free. It's thousands of dollars benefit here. And if you were at the Platinum event, you saw what the value of these portfolios are. And in order to qualify for this giveaway, all you have to do is leave a comment under this video. We're doing it every month this year. So the year's running out. So make sure you leave a comment and try to get into the drawing before this month and next month ends at the end of the year. And it includes our time strategy, which is sideways based. It's an income based strategy. We do calendars, butterflies, things that are designed to generate income. You're not looking for the big directional moves, etc. Then we go to the volatility portfolio, which is triangles. You've seen so many triangle breakouts in these recordings, and that's what the volatility portfolio looks for. And then the one that's really fun, the AI based impulse strategy, which is those zigzags within a wave 3. AI infused, and the record has just been phenomenal that we've had. If you were on the Platinum event, you saw the performance that's being created here. It's been just stellar and an awful lot of fun. So again, leave a comment under here. Hit subscribe if you haven't already. Tell some friends. We'd really like to push this up to the 50,000 subscriber level. We're getting there. You know how all this works, how the metrics work, etc. So we'd appreciate your support there. So looking at UNG, You'd all ask about it. We'd taken it off because it really wasn't doing anything. So I read all of your comments. I answer as many of them as I can, time and travel permitted, but I do read every one of them. And I want to know what y'all are interested in. And so you ask about the UNG, and we had a bit of a move. We've seen some snowstorms up north, the Farmer's Almanac, and there actually was some data on this yesterday that it's going to be an odd year winter-wise. Some parts of the country are going to have a worse than normal winter. Other parts are going to have a more mild winter. So what does that do for natural gas? Well, it's not sure. We got a little bit of a bounce, but look what's happened here. Again, the zigzag pattern. The B wave at 38.2% leads you to a 61.8% extension. Exactly where natural gas went. If the zigzag is over, what do? You retrace the C wave, all the things I've been telling you. And we did. So we've retraced that. So now what's going on? Well, what's interesting here is if you take a look at UNG, we're forming just a little bit of a triangle here. It's not a big one, but it's a small consolidating triangle right here. And that means that we are going to see some sort of a move here out of natural gas. It's not huge, maybe a couple points. But if we break to the upside, then we could retrace this entire zigzag pattern and come all the way back to this beginning level, the zero level, which is where a zigzag pattern starts. So we'll see which way we break on natural gas from this triangle. That's going to be interesting to see. And then oil, we'll take a look at USO, and we still have this big triangle here. So basically, it just continues to consolidate further. This is a second time that the triangle has created a larger triangle. This happens sometimes in these consolidating patterns, that the triangle continues to consolidate and just forms a larger and larger triangle. Normally, what that means is that you're going to get a more volatile breakout, meaning when we do break out, it could be a bit more of a vertical move rather than a 45-degree angle move. I still feel like, and there was news this morning, you may have seen, OPEC is waiting on their time to increase production. They're on pause there, and I think that's ties right into what I've been talking about with President-elect Trump, drill baby drill, creating more domestic production. OPEC wants to keep the prices higher, so I think they're going to wait and see what happens there before they enact any sort of action. But I feel like they'll cut production if the U.S. increases it, so they'll match the increases from a domestic side and by decreasing their output to hold the price higher. So I do feel like even when we break out of this triangle, which we will, we're going to have trouble at 77.5 as resistance or down to just under 67.5 as support. I think there's a great chance that we stay in this range for a while until we find out into next year what the plan is for increased production here in the U.S. All right, looking at some stocks of interest, CLSK, you guys ask about that one as well. Just as a reminder, we looked at MARA as a case study in our TradeFinder webinars that we do every Tuesday at 1 p.m. Eastern Time. It's live during market hours. We look at the market, we look for trade ideas, and we have a live Q&A. So if you haven't joined TradeFinder, look at the link that's coming up on your screen here and sign up there. It's free. It's a great community, good questions. Everybody interacts. It's a lot of fun. So sign up for that. And if you go back and look, you'll see the comments. We gave out MARA as a case study consideration 2 weeks ago, and it was a 2-day trade. Some of you called it a home run. I'm glad you guys were following it. So last week we did XRT. So we did the retail ETF, which is moving to the upside as well. So we have some great ideas during TradeFinder. CleanSpark is in the same area as MARA. They are Bitcoin miners, basically. Hasn't performed quite the same as MARA, not too far away either. So if you're looking for one that MARA is up big today, a little bit of a move to the upside here in CleanSpark, maybe it plays a little bit of catch up in the miner space. So you want to watch this 15 level here. If we can break above it, which we tried and we're trading below it now, but if we can get back and close above it, you can see we got a little too far from that 10-day moving average. You know the rule, no security in any time frame gets too far from the 10-day moving average. That's exactly what happened here. We gapped up, we went vertical. Two things that I don't like as far as chasing a move. So we came back down, we filled the gap, we came back to the 10-day moving average, and now we're right at this resistance area here at 15, trading at 14.28 right now. So keep an eye on this clean spark, because if we can break above 15, then I think we do go to 20, and that one could be a good one to play catch up to MARA. I think that would be quite interesting to watch. A couple other stocks that y'all are always interested in, NVIDIA, and we've been talking about this, the addition to the Dow. Is that going to be the kiss of death? It is a momentum stopper. It doesn't stop stocks from going to the upside. I do think NVIDIA goes higher. They're just the leader. They're so strong. And then you can see that in this break here, we traded below the 50-day moving average, came back up to it. That's the royal blue line. And we set a wave 4 right at the 38.2% level, which means we could break back to the upside. But you got to see NVIDIA close back above 140 and back above the 10-day moving average. I think NVIDIA is just a watch and see. Have it on your watch list, but I don't think you want to chase it yet. Let it close above 140 with a follow-through day and back above the 10-day moving average, and then perhaps we're off in the wave 5 on NVIDIA. AMD, which has been lagging, not performing as well in the space. And we have this potential here because we've broken below the 100% extension. We're below the 10-day moving average on AMD. It still seems like it wants to creep on down to that 161.8% extension. It doesn't have to, because the B wave at 61.8%, 100% extension is what you're looking for, but the extended level would be 161.8. If we do continue to drift down, I think we find a lot of support down here around 130 on AMD. If you want to go long AMD, once again, you've got to get back above that 10-day moving average, and I think we got to break back above this 100% extended level here. These are going to act as resistance. If we can get above there, then we should go test the 50-day moving average, and then we'll reassess at that point in time. But for now, I think it's difficult to go long AMD just yet. Keep an eye on it. Seems like the path of least resistance would be just a continued slower drift down. We'll see how that plays out as well. And then staying in the whole semiconductor space, looking at AMSC, another one that you guys asked about in last week's recording. So once again, trying to follow along with what you guys want to see. Had a nice wave 3 here. And look at this triangle that's being formed here. Right? This is the kind of stuff we look for in the volatility portfolio that I was just talking to you about. We have a nice symmetrical triangle being formed here in AMSC. So we're going to get some sort of a breakout, I think, in semiconductors. So we'll see if we can break out of that triangle and continue higher. We did not label the wave 4 here, and it's the software. Just as a reminder, this software program at hub.com, HUBB.com. If you haven't gotten a copy of it, and you'll get it. It's free. You get the live Elliott Wave charts, intraday charts as well, which we look at during TradeFinder, etc. It's a great piece of software. So go grab it. And if you saw the Platinum event with what the AI performance has been, you can select a subscription to get the AI signals if you'd like. It's a great piece of software. But these are labels that are in the algorithm that's programmed into the software. I don't personally label these. I just follow along and read and analyze what the algorithm is showing, and the algorithm is programmed exactly as Ralph Nelson Elliott wrote it over 100 years ago. So that's where the labels come from. But with this triangle here, you're going to get a breakout of AMSC. So a straddle, strangle, something along those lines, or just wait for the breakout and then trade it directionally once it makes its move. Hard to know exactly which direction it's going to go. And to finish things up, as we usually do, we'll take a look at the international markets. We'll look at the INDA real quick. We talked about this one. We nailed this one, where we said if we broke 57 down to 55, you all know this. If you've been watching the recordings, we broke 55. We're going to 53. We held that, then said that we should come back up and test 55. That's exactly where we are right now. So been spot on this. And to go long the INDA, I think you have to see a break back above that 50-day moving average. There are some interesting things going on internationally. We'll show more of those next week. But again, hope you're having a great holiday so far and have a great holiday weekend. Thanks for watching. As always, look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.